Inflation just came in hotter than expected. The latest CPI report on February 12, 2015 shows a rise to 3%, beating the 2.8% estimate and up from 2.9% last month. Meanwhile, core CPI, which excludes food and energy, came in at 3.3%, higher than the 3.1% estimate and up from 3.2% last month. The market reacted instantly. The Dow dropped 418 points. The S&P 500 fell 0.9%. And Nasdaq slid 0.8%. What does this mean for your investments? Let's break it down. The Federal Reserve prefers core CPI because it removes volatile food and energy prices, giving a clearer picture of underlying inflation trends. But here's the problem. Both numbers are still above target. The Fed's goal is 2% inflation, and today's report makes it clear we're not there yet. This puts the Fed in a tough spot. Alright, here's the deal. The Fed hasn't cut rates yet in 2025, but investors are betting that at least 2 cuts are coming by the end of the year. Markets originally expected faster rate cuts, but with inflation still high and unemployment creeping up to 4%, the Fed is being cautious. Powell made it clear. There's no rush to cut rates. Polymarket traders are pretty divided on how many Fed rate cuts we'll see in 2025. Right now, the highest bet, 31%, are on just one cut of 25 basis points. 24% think the Fed won't cut at all. Another 21% are betting on 2 cuts with a total of 50 basis points, while only 12% expect 3 for a total 75 basis points. It's clear there's still a lot of uncertainty about where the Fed is headed. And Polymarket is reflecting that. Definitely worth watching. Bottom line, rate cuts are coming, but slower than expected. If inflation stays sticky, the Fed might wait longer than the market hopes. Keep an eye on the data. Trump wants the Fed to lower rates, but Powell is holding the line. He knows that cutting too soon could send inflation higher again. So, unless inflation drops significantly, expect rates to stay higher for longer. So how is this hitting the markets? Treasury yields are rising, with the 10-year yield hitting 4.6%. And the US dollar is gaining strength. That means higher borrowing costs and trouble for overvalued tech stocks. Investors are now reevaluating their portfolios, shifting towards safer assets. The big question, is inflation really under control, or are we stuck in a high-rate world? If the Fed keeps rates high, markets could stay volatile. So, do you think rate cuts are coming soon? Or is inflation here to stay? Drop your thoughts below. And don't forget to like, share, and subscribe for more market updates. Thank you for watching.